More uncertainty surrounding employment in South Africa as Anglo American Platinum, the world's largest platinum producer, said yesterday it will suspend production at several mines in the country. Today I'm speaking to Annabel Bishop from Investec to discuss reasons behind this decision and the implications. Annabel, thank you for joining me. Firstly, how will this reported closure, which could result in 14,000 job losses and a 20% drop in annual production, have on South Africa's already struggling economy?
Obviously, the fact that Anglo Platinum has announced a likely retrenchment of 14,000 jobs is very negative. Should this go ahead, and indeed this large number of individuals actually lose work, this will impact the economy negatively, both because this will impact on consumer spending, and also as well, these individuals will likely become an increased welfare burden to the state. Secondly, the damage that has been done to foreign direct investor sentiment is quite substantial. South Africa has a significantly low level of foreign direct investment as it is, and clearly countries that have seen successful reduction in unemployment and strong economic growth rates have been the ones that have pursued policies that have made it attractive for foreigners to invest directly in their economies. In particular, this has obviously been one of the key reasons why China has changed from a poor rural backwater with high unemployment to the economic powerhouse it is today. It is crucial for South Africa to reduce policy uncertainty and to foster better employer-employee relations so that it can actually become a more attractive foreign investor destination in order to reap higher growth rates and significantly reduce unemployment, poverty and inequality.
Can you tell me the state of the labour market and employment in South Africa, and how much of an impact does the mining industry usually have on South African growth?
South Africa has extremely poor labour-employee relations. If one looks at the Global Competitiveness Report of the World Economic Forum, you can see South Africa is ranked worst in the world out of 144 countries. This is imperative that South Africa improve its labour-employee relations in order to allow the economy to grow faster and create more jobs. The impact that the mining industry has on South Africa's economic growth rate is relatively small, but the problem is that these strikes that are persisting started in the mining sector and have spread to other areas as well. We are now seeing significant strike action in the agricultural sector, and this is harming economic growth.
The South African rand led declines among emerging market currencies yesterday. What do you see from this currency in the short term? Do you expect this downtrend will continue?
The negativity that has affected the rand at the moment is due both to the downgrade that South Africa has seen from Fitch recently and also the ongoing unrest in the mining sector. In particular, South Africa is a small open economy and is heavily influenced by global economic events. However, with the fact that the rating agencies are now focusing on South Africa's rising welfare burden and concomitant poor economic growth, we have seen a downgrade. The rating agencies maintain South Africa on a negative outlook, which means that they may look to downgrade the country again when they reassess South Africa's creditworthiness. This is clearly a concern because as South Africa sees further downgrades, so its cost of raising funds will increase. The concern clearly with the rand is that foreign direct investment is very weak in South Africa, and we rely on foreigners' purchases of our bonds and equities instead. So this inward portfolio investment, should it turn and flow out, will see the rand weaken very substantially. So these are some of the concerns that are afflicting the currency at the moment. The short-term trend could see the rand weaken somewhat further, but the purchasing power parity valuation of the domestic currency places it closer to 8 rand to the US dollar. So should we see the negative issues start to dampen down, then we would likely see the rand track stronger instead. However, over the longer term, the currency will continue to appreciate by about 2 to 3% due to the differential between South Africa's inflation rate and that of its chief trading partners.
You mentioned the Fitch rating agency there, which dropped South Africa's credit rating by a notch last week. Is this solely due to uncertainty in the mining sector, or are there other factors involved?
South Africa's recent downgrade from Fitch in its creditworthiness has come on the back of the fact that all the rating agencies are increasingly concerned about South Africa's poor economic performance, high unemployment rate, social unrest, particularly demonstrated by the strikes in the mining industry, which also spread to the transport industry last year and the agricultural sector this year, and indeed the continuation of the very poor relations between employers and labour in South Africa. The concern is that there are these significant labour rigidities in the market, which are increased by substantial union activity. South Africa has a tripartite alliance governing the country, which means that they are in control the South African unions, the South African Communist Party, and the African National Congress. The consequence of this is that there is very high activity from the unions, and this has clearly increased South Africa's labour rigidities. The concern the agencies have is that should the economy not see substantially faster economic growth, it will then not be able to service its debts as well as it has done historically, and the concern clearly may well then be that the rating agencies may look to downgrade South African further. So it's not just an issue from the mining sector, but indeed it's across the economy. However, what has positive recently for South Africa is that we have seen Cyril Ramaphosa, who is a very successful businessman, appointed as deputy president to the ANC. So this should see a turnaround in the ANC's focus on business in South Africa, and specifically in increasing the enabling environment to do business. As a consequence, therefore, the rating agencies have picked up on this. Some of the rating agencies have picked up on this, and there is a possibility that they might slow their concerns in terms of South Africa's outlook.
Lastly, Annabel, fatal road crashes cost South Africa's economy R309 billion each year, or the equivalent of 10% of gross domestic product. Because of these statistics, do you think there will be any action taken to reduce these numbers?
The high incidence of road fatalities in South Africa is obviously something that is of grave concern. The actual calculation of this cost of 309 billion or 10% of GDP, I'm less certain of, because it's not actually a factual statistic produced by government. But what is obviously concerning is that the high number of individuals losing their life. And from that point of view, I believe that there will be some substantial action taken to reduce this. But more particularly, action needs to be taken in many of the unregulated transport industries. And from that point of view, the minibus, taxi industry in South Africa needs to be regulated a lot more closely, and there needs to be far greater focus on improving the safety of these individuals, which is, even though it operates in the private sector, is the main choice of transport for the poor in South Africa. And as a consequence, this needs to be looked at very closely to improve the safety of these vehicles and also to ensure that the drivers are properly and qualified.
Thank you, Annabel, for your insights from Johannesburg. Stay tuned for a special report on Japan from Natalie McDonald. Take care.